after earnings, down now by 6%. Google facing an antitrust lawsuit, up by 2.5%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. Appreciate that update. You're listening to Bloomberg Business Week. Carol Massar along with Paul Sweeney. We had a lot of virus headlines today. And of course, we were just recently talking about what's going on in New York City. We did have the head of Roche come out warning that a widespread vaccine this year is unlikely. And we continue to see virus spread around Europe once again, a second wave there. There's a lot going on when it comes to COVID-19. Alyssa Rapp is one of those voices we've talked to many times throughout the pandemic. She's CEO of the healthcare solutions company, Surgical Solutions. She joins us once again on the phone from Deerfield, Illinois. Alyssa, nice to have you here with Paul and myself. How is it going?
Hi, Carol. Hi, Paul. Thank you for having me. Well, I think that it continues to be a complicated COVID landscape. On the one hand, we know the diagnoses are up in 56,000-ish a day, and 31 states are reporting more cases than the previous week. And yet there is an overwhelming amount of intelligence now that COVID-19 transmissions from children, and maybe the children are not to blame. So I think it's a tough to navigate.
So, Alyssa, on that front, the children here, the New York City schools are, obviously the largest school district in the country, opening pretty well so far. Does that suggest that maybe children are not super spreaders, which was a risk as we reopened schools?
Great question, Paul. So, there was an interesting article on this in The Atlantic just about 10 days ago that schools aren't the super spreaders. From an economist at Brown University, Emily Oster, and I'm certainly not seeing that they're the super spreaders where we are in suburban Chicago. And if children are in masks and socially distant, between that economist view and the American Academy of Pediatrics literally also printed an article that said COVID-19, the child is not to blame. And an Icelandic study talked about how children don't give it to teachers. I am not an epidemiologist. I said it once, I'll say it again. But to me, the data is compelling that children don't seem to be super spreaders. And I'm really glad the reopening has been less virulent, pun intended, than people anticipated.
Right. We actually had Emily on, and we did a great story in Bloomberg Business Week about her and just kind of her background and her thinking. But we also had her on to talk about her work and her research. Yeah, it's interesting. I just did a big discussion with a bunch of global real estate leaders. And, there was a consensus, especially when it comes to colleges and universities, a feeling of we've got to get those students back. I think, the concern among colleges and universities has been the older professors and their exposure.
Yeah, and I teach, as you may know, at Stanford University and University of Chicago, and they've been very conservative about Zooming only for the fall out of not concern for potentially me or my age peer group, but older professors. And I think that's actually gone better than expected from a student learning perspective, at least at the graduate level. But I think we do, of course, have to be most concerned about our most vulnerable population, and that includes age and other comorbidities or risk factors. And those are the folks who will likely get the vaccine first, as they should. But the question now becomes, how do we learn to live with it until the vaccine is truly widespread by the middle of next year? And I'm a little bit hopeful, in spite of the numbers I cited in the beginning, that if children aren't the super spreaders and we can at least get kids back to school with masks, socially distant and safe ways, even if it's hybrid learning like my two daughters who are under 10 both enjoy, then at least civilization and society as we know it can start to unlock a little bit.
Hey, listen, your company, you have over 200 employees, are really on the front lines of this in the healthcare system. One of the concerns or questions I guess people have is, okay, we being the U.S. healthcare system was fairly well blindsided by this back in March of last year. What have we learned from a healthcare facility perspective? Are we in better shape for a potential second wave?
I talked to our major hospitals. We have 40 across the country in 9 states, and they are better prepared operationally in terms of PPE and supplies and protocols. But a lot of hospital administrators think about COVID right now as a second job. It literally doubles their workload. So I think the bigger risk is not operational preparedness, but burnout amongst frontline providers as well as the administrators, because this has taken a major toll on our people.
Hey, I want to go back to, if I may, just Alyssa, to education for a moment. I do wonder if there had been some consensus, some overarching guidance from government. I'm not looking to get political here, but some rules from the government about here's some plans and ways to reopen education on a national scale so that we didn't have all these hybrid approaches. Would that have been better and maybe helped get education open, up and running sooner and more and safely?
It may have, but I heard Dr. Fauci speak to the Economic Club of Chicago about 6 weeks ago, and his response to that question was, I thought, the best I've heard, which is our federal response should be one of localization. So it doesn't matter what state you're in, it should matter what locality you're in and what the cases are. Are they on the rise? If you're in a state where it's on the rise, but your locality has no cases of COVID, like some of our hospitals in rural Kentucky, then you should be back open. Your kids should be in school and masks with social distancing, no matter what the state situation is, although I don't know if Kentucky's a rising state today. But what I think his answer is the best one. If the federal policy had been its hyper-local decision-making on this, perhaps we would have had more nimble responses, perhaps.
So listen, I guess, as it relates to these schools and so on, I mean, it seems like the virtual is working. That's why I have a high school student with a kind of a hybrid approach. That seems to be one of the more successful ones.
I think hybrid with some in person and some virtual learning does, to me, also, Paul, seem like the more successful approach. If, of course, you can flex to pure virtual if there's an exposure, and if the world is very different come spring and there's a vaccine that's widely distributed, then people could be back. But I am grateful we're back hybrid as well in elementary school. I think the biggest risk, as we know, with our college campuses or graduate schools where young adults are in concentrated settings and maybe not taking as many precautions, and that's where we see a spread. So we'll see.
All right, sit tight. Alyssa, we're going to come back and continue our conversation, do a little bit of news, and then we'll finish up with Alyssa Rapp, CEO of the healthcare solutions company Surgical Solutions, on the phone from Deerfield, Illinois, because there's certainly a lot of headlines when it comes to it. You're listening to Bloomberg Business Week. Carol Masser along with Paul Sweeney, and you're listening to Bloomberg Business Week on Bloomberg Radio.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
We are listening to Bloomberg Business Week. Carol Massar along with Paul Sweeney. I just had a bunch of tech problems, man. I'm becoming like this.
But you're
tech.
back. I can see you.
Oh, I can see you too. It's like amazing. I can create your own hotspots, sign on.
Yep.
It's just amazing. Wife is just crazy. All right. Speaking of crazy, all of the virus headlines. So we're going to get back to Alyssa Rapp of Surgical Solutions in just a moment. Let's get back to your top business stories, though. Never crazy, always.
That's what I thought was coming next when you said, speaking with crazy, here's Charlie Pellet, and here's what's going on. We've got the Dow, the S&P, NASDAQ, all advancing as lawmakers negotiate the size of a potential spending bill to bolster the economic recovery. We are holding close to session highs. Let me get right to the numbers here. S&P 500 index up 39 now. That is a gain of 1.1%. The Dow up 279 points, up by 1%, and NASDAQ up 120. That is a gain of 1%. So stocks rebounding somewhat from yesterday's declines. 10-year down 6/32. 10-year yield right now 0.79%. Gold up 0.4%, 19.12 the ounce. And West Texas Intermediate crude up now by 1.5% at 41.46 for a barrel of West Texas Intermediate crude oil. President Trump this week came out swinging against Anthony Fauci, the government's top infectious disease expert, calling him, quote, an idiot. Dr. Amish Adalja is a senior scholar at the Johns Hopkins Bloomberg School of Public Health. And on Bloomberg Television this morning, he was asked about the importance of vaccines and science.
I think it's obvious to anybody that looks at the reason why we have lifespans of 70s and 80s and then looks back at the work that science and medicine has done with vaccination, with public health. I don't think that this is a disputable type of thing. And to hear the president call Dr. Fauci or allude to him as being quote unquote an idiot really just shows that he has complete envy for somebody like Dr. Fauci, who has real credentials and has a real track record and has expertise that he will never gain.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. IBM shares lower after earnings. It did report third-quarter revenue that beat analyst forecasts last night, but it declined to provide any specific guidance. IBM shares lower now by just about 6%. After the bell, we will be hearing from Netflix. That report will show whether the pandemic-fueled boom is over. Netflix has been picking up viewers with people staying home. Netflix shares right now are trading little changed, up by just about 0.1%. And one additional business note, Bitcoin has climbed back above 12,000 for the first time in more than a month, reaching a key level that chartists and technicians say might set the largest cryptocurrency up for further gains. Charlie Pellet, Bloomberg Radio.
Paul, remember when we talked about Bitcoin like every day?
Yes, exactly right. And before that, it was Brexit every day.
And then it was Brexit, exactly. It's just crazy.
No.
Let's get back to our guest, Alyssa Rapp, CEO of Surgical Solutions. Alyssa, you did mention you are teaching. Are you teaching classes right now? I'm just curious if you are and how that's going.
Yeah, thanks so much, Carol. I did teach this spring in the beginning of the pandemic, and I just finished a course at Stanford Business School via Zoom, of course, and it's going well. It's just a different art form. When you're a professor at a graduate level with 40 to 60 people in the room, you read the room and their body language as well as probing them with the Socratic method. All that can be done via Zoom. It's just slightly different, and it has taken practice. But it's gone well. Thank you for asking.
So what's, you think about it, I have two children in college. Thankfully, it's their last year, tuition-wise. But they both said, yeah, it's not ideal, but we're kind of getting through it. The only thing, labs are a little bit of an issue. But other than that, they were doing a lot of their stuff kind of remotely anyway as they get to the later years of college.
Mm-hmm. I think it also depends on the nature of the student, him or herself, right? If this is a self-starter who's going to do the work and still gets to be in an environment with peers, hopefully in a safe environment with peers, social distancing and masks wherever possible, I think that it can be still really successful. I've been really surprised and delighted by how I've been able to develop and maintain really meaningful relationships with students and dive into the subject matter via Zoom. There's no substitute for in-person. I'm not suggesting the world should flip a switch and remain this way once the vaccine is widespread, but I do believe that it is still a very effective way to teach, and it's also all about, not to be self-serving, but the commitment of the teacher to learn and master this new medium, because it is a different way to teach.
Yeah, absolutely. Are you still teaching your class on the wine industry?
No, this year, that one was hard to commit to, given that one really does need to be live. So, no, sadly. I do biweekly talk and taste programming with a friend, Tracy Burns, who used to be on Fox Business Network. But otherwise, I'm not teaching wine. This was managerial skills for Stanford Business School and for the University of Chicago Business School, women as investors, CEOs, directors, and executives.
All right, more serious stuff. Hey, speaking of serious stuff, I do wonder, what changes when it comes to medical systems, healthcare systems as a result of COVID, whether it's the increase in telemedicine, or I do wonder about whether the financial structures and financial, their backdrops, whether they were really tested during the virus and whether some of them just don't make it through.
I think both. Carol, I think they're both really good points. So telemedicine, according to, the markets, shows like it's accelerated 5 years with market caps for public equities and telemedicine to prove it. And those are one end of the spectrum. And I think there will be more behavioral health online and screening. There'll be more specific matters involving cancer. There's an incredible startup in Chicago actually called Cancer IQ that came out of the University of Chicago, and it helps for pre-screening of cancer through technology. So there'll be amazing opportunities like that should accelerate because of COVID. And yet hospitals, as you already said, operate at such thin margins, 1% to 3%, that if you don't get adequate reimbursement from the government because of the pandemic, or if you don't, if you're not operating efficiently enough, there will likely be regional medical centers who struggle to make it through and have to either go under or get acquired by a bigger system.
So that kind of continues a trend, Alyssa, that we'd unfortunately been seeing prior to the pandemic. But when you think about the economics of a COVID bed is much less profitable than, say, a cancer bed or something else. A lot of those folks, those 1% to 2% margins, it seems like a lot of areas of the country are going to have faced even deeper pressures.
Agreed. And it got really complicated in terms of the bailouts or government subsidies for entities, because there was a period of time that if you were a hospital that was part of a system with more than 500 employees, you couldn't get access to PPP, which is insane, right? The payroll protection program not being able to apply to our U.S. hospitals was nuts. But I think the Congress figured that part out, to the best of my knowledge. But it's really important that we realize that if we want to have healthy, functioning hospitals and regional access, if not local access to great medical care, we have to really think about the structure of those systems. This pandemic has undoubtedly, in my mind, shed a light on some of those challenges.
All right, we're going to have to leave it on that note. Always get so much when we check in with you, Alyssa. Thank you so much. You do wear so many different hats and really look at the world in a lot of different ways. Our thanks to Alyssa Rapp, CEO of Surgical Solutions, on the phone from Deerfield, Illinois. Yeah, I think it's really telling what she had to say about kind of healthcare systems and what happens from here, Paul.
Yeah, I really worry about, and I read a lot about how some of these smaller communities are losing access to quality healthcare, and the drive to get that healthcare is just getting longer and longer and longer.
Right, and we already see rural communities, where they just don't even have the access. So we still have some big problems there. All right, let's get back to world and national news headlines. For that, over to Nancy Lyons in our 99.1 newsroom in Washington.
Thanks, Carol. President Trump's campaign says the last-minute changes to the debate rules will not stop him from going head-to-head against Joe Biden. The debate commission says it will allow each candidate to speak for 2 minutes uninterrupted for portions of Thursday's debate. President Trump told Fox News it's unfair, and he's really not a fan of the commission.
I had problems with them 4 years ago where they stifled out my mic during my conversation with Crooked Hillary. And they did it on purpose. Look, these people are not good people, this commission. A lot of funny things go on with them.
Democratic presidential hopeful Joe Biden is staying off the campaign trail today and prepping for the debate. President Trump is heading to the battleground state of Pennsylvania. Well, once a coronavirus vaccine does reach the market, there's a question on whether Americans will trust it. The Journal of American Medicine has released the findings of a new study focusing on the factors at play. Cornell professor Douglas Kreiner is the study's lead author and says politics certainly plays a role.
So President Trump comes in lowest in our survey. So people were least willing to vaccinate when the endorsement is coming from President Trump. It's slightly higher from Vice President Biden, hugely so. And then much more likely to vaccinate when it's the CDC or the WHO.
As for when a vaccine becomes available, Roche CEO Severin Schwan tells Bloomberg hopes are still too high regarding the timeline.
I think it's completely unrealistic to believe that there will be vaccines available for broader parts of the population before the second half of next year.
Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Master, Paul Sweeney. So, all right, when's the last time, I don't know, do you often take the subway when you go to work, or you used to?
I haven't since the pandemic, but I take it every day, twice a day. Enter the R train from Penn Station to the Bloomberg office. I saw this story about up to 25% of the transit workers may have had COVID-19, and two things. One, that is a huge percentage, but I'm actually thought it might have been higher given the contact that these people in close environments. But again, talk about an essential workforce.
Yeah.
And a workforce that was at risk and is at risk. And you just hope that those good folks, they are the absolute, one of the first people to get whatever vaccine does in fact come along to the marketplace. You think about them, you think about, obviously the healthcare workers, but boy, those transit people that were there during the really dark times are still there today, getting people back and forth to where they need to get to.
Yeah, it's pretty remarkable. And, this story by Dow Jones, gets into too about kind of in the early weeks. And, Dr. Anthony Fauci has talked about this as well, that during the early weeks of the pandemic, transit workers said that they weren't allowed to wear masks, or that they weren't supplied with enough PPE, personal protective equipment, but at that point, right, we were all trying to kind of find our way, and we were trying not to tap into PPE because the medical community really needed it. So it was really, again, we didn't have the playbook, right? We were just kind of finding our way through it. But I agree with you, Paul. I think I could have seen, it's so dense down there. It's so closed off. You're exposed completely to all of the public, that I would have thought, potentially those numbers could have been a lot higher.
Yeah, they've talked about, particularly on the newer cars, they have much, much better circulation systems, air circulation systems than they used to, but still, it just seems like the optimal breeding ground, and it's going to be tough.
Well, anytime you're on a subway, right? Like you grab a pole and you're like, maybe I wish I hadn't done that.
Exactly right, and you do that untold times per day, and it's part of life living in a city.
Yeah, absolutely. All right, you're listening to Bloomberg Business Week, and this is Bloomberg Radio.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. Stocks holding close to session highs as lawmakers negotiate the size of a potential spending bill to bolster the economic recovery. S&P rebounding from yesterday's sell-off as House Speaker Nancy Pelosi said Democrats and the White House are closing in on an aid package, though the Republican-controlled Senate remains in favor of a smaller deal. The S&P 500 index is up 34 points, up 1%. The Dow now up 238 points, up 0.9%. NASDAQ is up 105, up by 0.9. 10-year down 8/32, 10-year yield 0.79%. Gold up $7 the ounce, up 0.4%, 19.11. And West Texas Intermediate crude up 1.5%, 41.46 a barrel for WTI. After the bell, we will be hearing from Netflix. Netflix lowered today by 0.1%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. You're listening to Bloomberg Business Week. Carol Massar along with Paul Sweeney. This story, Paul, among our most read on the Bloomberg. It's also, I have to say, it's a must-read story because it's about an economist who found, listen to this number, $16 trillion when she added up the cost of racial bias. And listen, we like to do math on these kinds of things here at Bloomberg, and this story definitely delivers. Let's get into it with Bloomberg News ESG reporter Sejal Kishan, along with Bloomberg Business Week editor Joel Weber, both of them joining us on the phone from Brooklyn. Joel, like I said, at Bloomberg, we like numbers, and this is a big one.
That one really jumps out at you.
Yes.
And Sejal found a story that is just one of these stories that it's sort of like, how do you find that story, I think. And it's about Dana Peterson, who is a Citigroup global economist. She tried to put a price tag on race bias in terms of what it actually means to the economy. Sejal, how did she come up with $16 trillion?
Well, it took her something like 3 months to do, and she pored over. I mean, she's a macroeconomist, so she's normally looking at sort of like big macroeconomic data, but instead she turned to microeconomic data. Yeah, everything from wage levels by race to debt levels by county, for instance, and basically tallied the cost. Saying that over the last 2 decades, the U.S. economy lost out on $16 trillion because of racism.
So, Sejal, is this kind of, I mean, what's the source of the lost economic growth? Is it taxes? Is it GDP output? Where do we see it in the economy? Or where did she see
Sure,
it?
yeah. It's GDP. That was her calculation. She looked at the overall economy and did it that way.
And Sejal, talk to us about where it's landed her. And this was a project that took months, not something that anybody had ever tried to do. And what was the outcome?
Yeah, I mean, obviously her report got a lot of widespread readership when it came out last month. But, since doing her report, she's taken up a role at the conference board where she's now the chief economist there.
What's great about a story like this is, and I feel like, Joel, I feel like this is a number we're going to be quoting at a lot of Bloomberg events, over the next year or so, virtually or other, because it's just, when you put a number on something, money talks and money gets people to do things. I mean, there's another one in your story, Sejal, that talks about her calculations and that an additional 6.1 million jobs a year, 13 trillion in business revenue could have been generated over the last 2 decades if Black entrepreneurs had fair and equitable access to credit. This is a story, I mean, VC, the venture capital world, I mean, there's just no money going there.
Yeah, no, absolutely. I mean, that number also struck me, that $13 trillion in business revenue. That's a huge amount. But, she did the work, she did the calculations, and we've also, our tech colleagues on the West Coast have done some stories about sort of the struggles of Black entrepreneurs trying to secure VC capital. So, this is the number, that she put on that, which is a huge number. And I think, putting or quantifying this, I mean, this goes beyond the sort of the social and moral imperative of sort of ending racism, putting a number on these things. And to take her words, she says this is a way that, people in the world of finance and economic and the economy, which is our wheelhouse at Bloomberg, this is something that they can actually relate to.
So interesting, Sejal. Going forward, I was looking in your piece, you've got some numbers about even going forward, the cost could be just outstanding. $8 trillion gain in gross domestic product by 2050 if we can close the racial equity gaps. That's according to Alterum, a nonprofit in Ann Arbor, Michigan. So the numbers, going forward could also be just compelling.
Yeah, absolutely. And we've done a lot of coverage about how Black and Latinx and other minority communities in the U.S. have been disproportionately affected by COVID and economically as well, not just health-wise. And so, given where the economy is now at the moment, it's not a significant number. What Dana mentioned is it's a growth opportunity, and moneymakers are always looking for growth opportunities. So maybe investing in Black-run businesses, for instance, is a way to not only help that community, but to get the overall economy back on its feet.
Sejal, another thing that stood out to me in the story, and it's just sort of one of those daggers in the heart, was this sort of this is a person that worked at Citi for a really long time and never put her face into the system because she didn't want her colleagues' bias to impact sort of her ability to do her job. Talk to us more about that side of the story.
Yeah, no, absolutely. That was one of the most poignant parts of the conversation I had with her. She's been on financial news networks, including ours, so it's good to see. But it was a really sad reality that she wanted to be judged on her work first, rather than people judging her on her race. And so, not putting her photograph on the email system, felt that she would have a better shake. Or a fair shake at being chosen to do presentations or write reports. But it was a really poignant part of the interview.
Oh my God, that personal story, and just talks about growing up and being stopped by police and frisked by police, and then going to a job and just seeing disappointment on a prospective employer's face. It's just. I think about this past year, and we talk a lot about racism and the impact of it, but when you start to hear these first-person stories, Sejal, this is real and it's rampant.
Yeah, no, absolutely. I think that's something probably that a lot of people miss, is the fact that there are so many professionals out there who unfortunately do endure the same sort of racism that everybody else does, and I think we don't pay so much attention to that. And her bringing and talking about her story brought that to life. It was a real sort of reality check.
Yeah, well, I'm glad you've told it. A really great story. Yep. And you can find this story certainly at Bloomberg.com and online and on the Bloomberg terminal. The headline, economists finding $16 trillion when she tallied the cost of racial bias. All right, Sejal, thank you so much. Sejal Kishan, she is our Bloomberg News ESG reporter on the phone from Brooklyn. Also from Brooklyn, of course, our thanks to Bloomberg Business Week editor Joel Weber. For those of you listening in New York, D.C., and San Francisco, watching on YouTube, Bloomberg Business Week continues. If you are listening on Bloomberg 106.1 in Boston, Bay State Business is coming up next. I have to say, though, Paul, it is. It's like this story I'm going to tuck away because I'm working on a lot of panels, and it's like when you say this number, it's like it just stops people because, there is, first of all, the right thing to do, right, and get rid of all of this biasness and racism, but it's also, there's a huge financial cost.
There's a huge financial cost, lost opportunity, opportunity cost for, generations of people. And I think the issue is if you can put a number on it, it makes it more real for a lot of business people, and people think that way. And I think that helps kind of humanize the problem a little bit more for people that may have problems relating.
Yeah, no doubt about it. All right, you're listening to Bloomberg Business Week, and this is Bloomberg.
Bloomberg World Headquarters. I'm Charlie Pellet. We move into the final hour of trading on this Tuesday, October 20th, with the Dow, the S&P, NASDAQ all advancing. Lawmakers are negotiating the size of a potential spending bill to bolster the economic recovery. The dollar has weakened, but the S&P 500 index rebounding from yesterday's sell-off as House Speaker Nancy Pelosi and Democrats and the White House all closing in on an aid package, though the Republican-controlled Senate remains in favor of a smaller deal. So here's where we stand. The S&P's up 33 points right now, close to session highs, up by 1%. The Dow's up 241, up 0.9%. NASDAQ is up 100 even, up now by 0.9%. Your 10-year down 8/30 seconds, 10-year yield 0.79%. Gold up $7.31 the ounce, up 0.4% at 19.11. And West Texas Intermediate crude up 1.5%, 41.46 a barrel. Nobel Prize-winning economist Joe Stiglitz says banks have gotten out of the business of providing capital to small businesses and need to be redirected toward that mission as the nation recovers from the coronavirus pandemic. And in a Bloomberg television and radio interview this morning, Stiglitz also slammed the stock market as, quote, a perverse barometer of economic success.
The strong stock market is almost a sign that things are not going well in other parts of the economy. So precisely, we need to focus on the role of market power in our economy, the low wages, the fact that at the bottom, wages are the same as they were 65 years ago, adjusted for inflation.
The Justice Department is suing Google for antitrust violations, alleging that it abused its dominance in online search and advertising to stifle competition and harm consumers. The litigation marks the government's most significant prosecution for several years. As for Google shares, they are now trading higher. Google is up now by just about 2.5%. Apple up 1.9%. Amazon up by 0.9%. Facebook up by 3%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
You're listening to Bloomberg Business Week with Carol Masser on Bloomberg Radio.
It is Bloomberg Business Week. Carol Masser along with Paul Sweeney. And this week's presidential debate, Paul, it's, I believe, expected to focus on foreign policy, but we shall certainly see what happens. And sure to come up is the U.S. relationship with China. So let's get into that, and also some thoughts on geopolitical risk in Asia that investors may just be ignoring. David Riedel is president and founder of Riedel Research Group. He's on the phone from San Francisco. David, so nice to have you back with us. I think the last time we talked was May, I believe. How are you?
A long time ago. I'm very well, Carol. I hope you're well.
Yeah.
It seems like there's new drama every week for markets, huh?
Well, absolutely. And here we are less than 2 weeks out from the presidential election. We're all gearing up for the debate. Talk to us a little bit about what you're watching in terms of some of the geopolitical risk over in the Asian region, because we do expect some of that to come up perhaps on Thursday in the debate.
Well, I certainly hope it does, because there's a lot of risk out there, and I think people are ignoring it to their peril. I think people aren't correctly following the conflict between India and China that flared up a couple of weeks ago. This ongoing tension between the U.S. and China. People are distracted by the election, of course, and by the pandemic and sort of the drama of the week, and they sometimes forget to pay attention to things that are on the horizon a little bit, but which really could have a big impact on investors and on risk appetite if one of these things came to fruition.
And David, you could put me on that list of people who may have taken my eye off the ball of things China there, as this pandemic has kind of taken center stage here. The last we really had China in our focus, arguably, was in Hong Kong, the protests in Hong Kong. Can you give us an update on what's going on in Hong Kong?
Absolutely. So Hong Kong continues to see its special status erode, being treated by China increasingly as just a simple extension of China, and ignored, unfortunately, by other players around the world, which would traditionally be in support of the one country, two systems approach that had been agreed to. The UK, of course, with a long traditional connection to Hong Kong, has been distracted by Brexit as well as their own issues with the pandemic. And the U.S., long someone who would stand for democracy and human rights, has been distracted and less focused on those issues in recent years and certainly in recent months. So unfortunately, Hong Kong continues to suffer the erosion of its unique status and special rights.
Does it not be the place, the financial, place it's been? I mean, is that just, that's the past now? It's not the future anymore?
Unfortunately, it is the past, and a lot of things, the U.S. has actually taken some steps to make it less attractive as a financial center, taking away its special status relative to China, because now they just continue an extension of China, not a unique place. So I would really watch Singapore and Shanghai to be the up-and-coming financial centers in Asia. It's been a long time coming. It's not going to happen overnight, but I think it's an inexorable move towards those new centers.
Hey, I do wonder, David, how do you factor in the election and the election outcome, whether it's a Biden White House or whether it's a second term of a Trump White House, and what that means for China-U.S. relations? Because I do think it's safe to say that the U.S., not just under Donald Trump and his team, but we're moving towards more pushback against China, generally speaking.
Absolutely right, and we should. I mean, they have really emerged since the 1970s and 80s into now the second largest, and by some measures the largest economy in the world, and it's natural that our relationship with them would be more tense, more confrontational, and more dynamic at this stage in their growth relative to ours. I think that the Republican administration has been less predictable in their actions, and I think that has been frustrating to many of our allies in international relations, as well as some of our people with whom we have more ideological and economic disputes. I think that many people would wish a more predictable actor in terms of actions and relationships with other countries, trade relationships, and so on and so forth. And I think they may see that in a Biden presidency. I suspect they would not see much predictability in a second-term Trump, and I think that would be a continuation of what we've seen in recent years, which has not been good for many of our international relations, and I don't think it's been a healthy development in our relationship with China.
David, if the Democrats do take the White House and perhaps even the Senate, do you expect that they will take a noticeably, confrontational or stronger stance against China than perhaps even the Obama administration did?
I think that they will, and I think that's a reflection of the reality of how far we've come. Having not dealt, I think, appropriately with, for example, supporting the Hong Kong protesters, the Uyghur minority in Western China, not confronting China on those fronts, and then having a erratic and confusing trade strategy with China, I think puts us in a place where some things need to be confronted on the human rights side, and some things need to be stabilized and sort of managed on the trade side. So I think a Democratic administration, and especially if they have some congressional power as well, would be a more predictable but more harsh partner with China going forward.
David, got about a minute, and then we'll come back and do some more. But just before we go to break, I mean, China and Taiwan, where is that headed?
Nowhere good. China has actually, just in the last few weeks, had some of its most aggressive military maneuvers in the Taiwan Strait.
Yeah.
Taiwan has been edging more towards independence, been more vocal in their views of themselves as a separate country, not as just a province of China, as that long-standing dispute. And other countries around the world have now started to accept that Taiwan is its own entity, and I think generationally we're headed towards a time when Taiwan and the Taiwanese think of themselves in that way. And China's not going to take that sitting down. So yeah. I would suspect that there's going to be some conflict there, as well as the issues that we see in the South China Sea, which are really getting heated up at this time.
David, hang on, and we're going to do some news, and we'll come back, because I do also want to get your thoughts on some stories that are on the Bloomberg today, talking about kind of the rise of Xi thought, President Xi specifically, and his thinking about everything, and just their Paul, their longer-term vision on everything.
Yes. Everything, yeah.
And we're so short-term.
Exactly right, and it's he has really cemented his position there in China. It's amazing to see over the last really 5 to 10 years.
Yeah, it's pretty remarkable. All right, we'll come back to David Riedel in just a moment. Right now, back to World and National News headlines. Back to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. The Justice Department is suing Google in a landmark antitrust case. The lawsuit accuses the tech giant of stifling competition to maintain dominance in online search and ad markets. Deputy Attorney General Jeffrey Rosen explains why the lawsuit is being filed now.
The matter has been investigated for more than a year now, and as I think folks are generally aware, in technology industries in particular, it's important to move as quickly as is practical because the markets are fast moving.
Officials say they targeted the search aspect of Google since it's at the heart of the company's business. 11 states have joined in the lawsuit. The Department of Homeland Security says it's launching a new effort to combat human trafficking. Acting Secretary of Homeland Security Chad Wolf says they're joining forces with other agencies to create a center with the focus on eliminating the problem.
By aggregating these resources, the center will serve as a central hub for victim support, investigative operations, intelligence and data collection and analysis, and training and outreach of law enforcement partners, civil society, and the public.
Wolf says the collaboration will allow DHS to better investigate, interdict, and prosecute perpetrators of human trafficking crimes. Well, the World Series gets underway tonight with the Tampa Bay Rays taking on the Los Angeles Dodgers. The Fall Classic will be played entirely on artificial turf for the first time since 1993 at the new Globe Life Field in Texas. Attendance will be limited to about 11,000, the smallest crowd for a series game in more than a century. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy, thank you so much. You're listening to Bloomberg Business Week. Carol Massar along with Paul Sweeney. And, I was just kind of scanning our most read on the Bloomberg, and there really is kind of a hodgepodge of stories. I mean, obviously, stories, Paul, right now on stimulus and whether or not we get this package done. So we have a lot on that. We have a story by Jonathan Bernstein of Bloomberg Opinion on why Biden is planning his transition already. And then you've got a story about the New York Jets, who are not doing so well.
It's just, I do listen to sports radio, and in New York, we've got two good sports radio stations. And I think where the consensus is for New York is, all right, at least with the Giants, we have something to work with. There's some tools there. There's some things to build on. There's a reason for hope. Heck, if they win Thursday night, they might even be within shooting distance of a playoff berth. That's how bad the NFC is. However, the other friends in town, the New York Jets, the consensus seems to be just hopeless. You have to just clean house and almost start from scratch. And they're already talking about who's going to get this quarterback from Clemson, who likely will be the number one pick. Will it be the Jets? And so do you tank in order to get the number one pick? So it's a little ugly out there for New York football.
It's a little ugly out there. I know. I grew up a Giants fan and with my dad and going to the games and stuff. They've had a couple of rough years, I feel like, the New York teams.
Yeah, we kind of hold them up as, one of the great franchises. But the fact is, yes, they won some Super Bowls, which is great, and 2 under Eli Manning. But they go many, many years, very, very down years. And you just don't see that from the really strong franchises, the Steelers, for example, and some others. And so that's what I think gets some people, Giants fans frustrated.
Yeah, exactly. So, that's just the way it is. But at least there's football. I'm just going to put it out there that at least there's a game for somebody to watch.
Yeah, and I think they're all trying the best that they can. Big Ten football comes back. My son's a student at Penn State, so they're all fired up out there in Happy Valley. So hopefully they can do it safely because the kids, it's one thing being a professional, it's another thing being a student athlete.
Yeah, no doubt about that. This is Bloomberg.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pellet. Stocks well off session highs, pairing gains. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks are pairing gains, and like you said, well off session highs. Dow's only up 68 points now. S&Ps are up 12, while NASDAQ is higher by 26. The U.S. 10-year yield at 0.8%. Gold trading higher by 8. Transports jumped 200 points, and among the main 11 S&P sectors, all were in the green, led by gains in energy, telecom, and the financials. Leaders to the upside in the Dow, Travelers, Walgreens, and Goldman Sachs, while IBM fell 6.5%. And led to the downside. Also after earnings, Lockheed Martin and Philip Morris both fell. And in other news, AstraZeneca's U.S. COVID trial may resume as early as this week, and the U.S. Justice Department has filed formal antitrust lawsuit against Google. Wrapping things up, Netflix reports after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill. We'll be all over Netflix as it hits. And to hear live breaking news over your Bloomberg Times Squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate it. Bloomberg Business Week, Carol Masser, Paul Sweeney with you. Bringing back our guest, David Riedel, president and founder of Riedel Research Group. And the reason this conversation is important is David's reminding us that China and U.S. tensions remain high, and there are significant ramifications. We need to keep that on the front burner as investors. David, thanks so much for coming back. You know, I want to get to the point of President Xi. What is his position right now in China? It seems as strong as it's ever been, is it?
It is the strongest leader that they've seen in recent decades. He controls every lever of power, continues to make himself ever more powerful, and has enshrined himself in Chinese political history by implementing what's considered now to be Xi thought on the same level as Mao Zedong thought, which is an incredible accomplishment for a modern Chinese leader.
What is Xi thought?
It revolves around a strong belief in nationalism. That's been true for many leaders, but it's more core to Xi's identity, and a very significant commitment to the military. Xi has been dramatically expanding military spending. They've built several times more ships since 2015 than the U.S. has, and now have a larger Navy than the U.S. This is an incredible turnaround over the last 10 or 15 years, when China's lack of a blue water Navy was really one of their military weak spots. So complete control of the military, of the political apparatus, and a dedication of all those resources to protecting China's national borders and national mission.
You know, David, when you talk about the buildup of the military, is that for show of might, or is that for actual might to put to work?
It's for actual might. They really feel very strong. They need to have control of more firm control of their borders, hence the dispute with India a few weeks ago, and very significantly protect their strong belief that they need to control the South China Sea for its oil and gas reserves, as well as its importance for seagoing trade, and it's so important to North Asia, Japan, and Korea, as well as to China, getting access to all the materials they need to continue to run the largest economy in the world.
So, David, what do you think the Chinese government leadership wants, or how does it want its relationship with the United States to evolve? Are they looking for conflict? Are they looking for, hey, just treat us as an equal partner? What do they think? What do you think they're looking for?
Or do they not even care about us that much anymore?
Oh boy.
Yeah, they don't. They do. I think they do care about their standing on the international stage. So let's globalize this for a second. Less important what their relationship is with the U.S., but they do want to see themselves in the upper echelon of countries, a equivalent power to the United States, for example. And they do have a 50 and 100-year view of how they're going to evolve towards this position of being the wealthiest country in the world, the largest country in the world, and the most powerful country in the world. And they'll wait generations to do it. They just really feel like they were humiliated by international powers back in the 1800s, and they never want to live through that again. So they need to be strong, powerful, and very well grounded in terms of their ability to control their sphere.
So what holds them back? And I do wonder too about, there's certainly their relationships with the big global powers, but there's also, relationships that they do on the side. And I do wonder how much pushback we see from other developed nations, especially when it comes to human rights abuses, privacy concerns, and other things that if you are going to operate in the upper echelons of power, there are certain rules that go along with that.
That's right, and we had long believed that as they became more involved in global negotiations and discussions and multilateral organizations and so on and so forth, they would start to play by those rules. But we've learned in the last 10 or 12 years that they're actually working to change those rules. So they don't have an interest in really playing along with the World Trade Organization and the UN and so on and so forth. They want to create parallel organizations or mold those organizations to reflect their growing power. They are very frustrated, for example, by the structure of the UN, which was, of course, created after World War II, that really excludes them from a position of power and influence in that organization.
So just a minute left here, David. So what does this mean for investors? Because I think about all those global multinationals that they would do anything to be in the Chinese market. So as investors, how do we need to think about it? And just got about a minute here.
So think about the history. The U.S. market has tripled over the past 10 years. It's nearly doubled over the past 5. Global markets have doubled, more than doubled over the past 5 years. The U.S. S&P has gone from 20 times PE multiple in 2015 to 35 times today. Many of these markets are priced for perfection. Investors simply have to realize that it is more likely than not that we will have some sort of geopolitical upset. Perhaps it's an accidental collision of two vessels in the South China Sea, where the U.S. has a new aircraft carrier group, the Ronald Reagan Group, down there right now. A small mistake could lead to a reevaluation of risk appetite around the world, and investors could really pull back on some of their enthusiasm for equity. So I think people need to be defensive, they need to be aware, they need to be informed, and they need to sort of look out beyond what's happening this week, this month, this year here in the United States, and think about longer term. Where are we going to be 2 years, 3 years, 5 years from now?
Well, and certainly China is somebody who understands long-term strategies just generally overall. So that's some really good insight. David, thank you so much. Great to catch up with you. David Riedel, president and founder of Riedel Research Group, joining us on the phone from San Francisco. Coming up, Paul, we've got the chart of the day.
We got the chart of the day, hopefully accompanied by the song of the day as well.
See if we can guess it. All right, that's coming up right here on Bloomberg.
Live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening to Bloomberg Business Week. Carol Massar along with Paul Sweeney. Coming up, we're going to get into Dave Wilson's chart of the day, Paul.
Yeah, absolutely. It's interesting on this market here. We just saw some strength there, but just kind of fading here. So a little disconcerting. But again, it's all about trade talk.
Yeah, exactly. And that stimulus program, right? All right, we'll get into the chart of the day in just a moment. Dave's looking at IPOs in just a second. Let's get in. Let's check in with Charlie Pellett for an update on headlines. Hey, Charlie.
28 minutes to go ahead of the closing bell. Can't forget Dave's song of the day. How will he possibly find a song about IPOs? You got to stay tuned for that. A bounce off the bottom here, as Paul mentioned, but the Dow, the S&P, NASDAQ, well off session highs. Right to the numbers now. S&P is up 23 points higher by 0.7%. The Dow up 177, up by 0.6%, and NASDAQ up 55 again. There, just about 0.5%. 10-year down 8/30 seconds, 10-year yield 0.79%. Gold up $7 the ounce, up 0.4%. 19.11 right now on the precious metal, and West Texas Intermediate crude up 1.5%. 41.46 for a barrel of West Texas Intermediate crude. After earnings, IBM slumping 6.4% right now. Netflix will report after the closing bell, down 0.8%. 3:32 on Wall Street. Time now for the small business report. Here's John Tucker.
29 years ago, college dropout Jeff Weiss started his small company in Hudson, New Hampshire. Green Streets is a distributor of paper, packaging, safety supplies, and personal protective equipment. The pandemic means that he is crazy busy. You actually started preparing back in January.
Unlike a lot of companies, we were very poised and positioned to take advantage of what was going on because we were already in the business of PPE and the related supplies. And we foresaw what was going on back in January. So we already started pre-buying a lot of the products that would become necessities back in January, February. I mean, we've had everyone from shopping malls in California to hospitals in San Francisco to veterinary clinics in Washington call us because no one could get gloves, no one could get PPE, no one could get cleaner, disinfectant.
You have the existing contacts that make it easier for your customers now to get these products.
Correct, but it doesn't make it easier in still getting them because, like, for instance, like on gloves, we are only able to get about 50% of our normal volume because there's just not enough supply to go around. And you could see it on the store shelves as it trickles down to the retail end.
It doesn't look like that's going to clear up anytime soon, does it?
No. So what happened, you had the closure in the winter months was bad. So we're still recovering because there's social distancing on manufacturing lines. Raw materials have gone up because as everything is opened, different products like takeout containers, for instance, for restaurants. There's a shortage on plastic because everyone's gone to containers. But the manufacturers can't keep up with demand. They can't get enough plastic, and they don't have enough people to run the machines.
Well, Jeff, we'll have to leave it there. Jeff Weiss, owner of Green Streets in Hudson, New Hampshire. I'm John Tucker. That's your Bloomberg Small Business Report.
And John Tucker, we thank you. Stocks trimming advances, lawmakers negotiating the size of a potential spending bill. Right now, the S&P is up 21, recapping up by 0.6%. I'm Charlie Pellett. That is a Bloomberg Business Flash.
All right, Charlie Pellett, thank you so much. You're listening to Bloomberg Business Week, and this is Bloomberg Radio. The drum riff, but I have no idea what it is.
Band?
Yeah. Is it?
No.
Is it Who? The Who?
It is.
Oh.
I could just right there. I could just feel a little Tommy there.
Yeah, very good, Carol. You didn't need Google for that.
I did not cheat. I swear to God. And actually, my first. All right. Okay. All right. I'm going to be real. I started to put in too much of anything, and then something weird came up, like too much of anything is bad, or I don't know what. All right, but it wasn't the Who. And then not until I heard that one little part of the song.
Well, there you
but
go.
it's old, right?
Yeah, it's old. It's around from the Who's Next era, so you're talking almost 50 years ago.
Wow.
It didn't make that album. It came out on a collection called Odds and Sods, so, kind of obscure, but it struck me as fitting for this chart because the real question is whether we're getting too much in some specific areas of the market, and it's something that Tavis McCourt, who's an institutional equity strategist over at Raymond James, pointed out in a note, and he specifically focused on, you've already mentioned initial public offerings, IPOs, as well as alternative energy stocks. That if you look at those areas of the market in relative terms, over the past 7 months or so, they have really taken off, and the chart illustrates just how strong they have been. If you look at the Renaissance IPO Index, which is a gauge of all these newly public companies, in the last couple of years or whatever, up 76% through Monday from a low in mid-March. And if you do the same with the Russell 3000 alternative energy equipment, it's a little geeky, but anyway.
Dave, it's a lot geeky. I'm looking at your chart.
You gotta have some way of pulling the group together, though. Up 172%, and we're not talking in absolute terms. In both cases, we are talking relative to the Russell 3000, one of the broadest gauges of U.S. stocks around. So these two groups really outsized performance after, kind of a lackluster few years, as the chart illustrates. And the way that McCourt sees it, it really comes down to being what he called liquidity-driven. All this money sloshing around, interest rates are low. Got to find a home somewhere, and so it's ending up in some of these more speculative areas of the market, specifically IPOs, and we talk alternative energy, of course, solar, wind, all those forms of power. If you want to know more, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward, and you can see for yourself why he calls these price moves odd. McCourt does. So you're talking about equity oddities here, and the email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
It feels like taking a dartboard and just throwing a couple of darts and okay, so let's do this and this.
It points to speculation, Dave, as you were pointing out. It's just kind of one of those things. I think Robinhood, I think day traders, I think, charts like Dave was showing here with IPOs and some of those other environmental names. It just kind of brings me back to the late 90s and .com and all that. A little bit worrisome on the valuation.
Right, and that's really his point is, to have this going on, in a broader market where, you're seeing some things shift around, but nothing like this. You just have to wonder what the heck's going on here. Looks kind of strange.
Well, time will tell how it all plays out, right? Ultimately, like
It
where
always
the
does.
where the bubbles are. I mean, it doesn't. Come on, Paul. You were there during the doc. I mean, do you feel like the IPOs that we're seeing feel like that?
No, I don't. They're much better, but the valuations that we're seeing are just extraordinary. But these businesses that are coming out today are actually established businesses for the most part, as opposed to the .com that was just thought of 15 minutes ago.
Right, and there's actually companies that are making money. All right, Dave Wilson, thank you so much. Dave will be back a little bit later on with his stock of the day. Back to world and national news for that. Let's bring in Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. House Speaker Nancy Pelosi tells Bloomberg there is some progress in discussions concerning the next round of stimulus. She's talking this afternoon with Treasury Secretary Steven Mnuchin, hoping to find some common ground on a bill so it could be passed before the election. Bloomberg's Irv Chapman with details.
Her 48-hour deadline was for both sides to lay out their specific proposals in order for a bill to be possible by Election Day, Pelosi explained in a Bloomberg interview.
I'm optimistic because I do think we have a shared value that finally is they want to crush the virus. And that is our main goal in this legislation so that we can open up our schools, open up our economy safely.
Pelosi indicated that even a major sticking point like the Republican demand for liability protection for businesses is negotiable if its scope is limited. In Washington, Irv Chapman, Bloomberg Radio.
The Justice Department says it's suing Google for antitrust violations, alleging it abused its dominance in online search and advertising to stifle competition and harm consumers. Jennifer Reed is with Bloomberg Intelligence.
Companies can enter exclusive agreements, and they do, and they can be perfectly lawful if they don't foreclose a substantial portion of the market. So the allegation here is that Google has entered so many of these contracts with so many of the outlets that they've sort of crossed that line, and they've gone to a point where the conduct has become anti-competitive.
Google has long denied the claims of unfair competition. Google argues although its businesses are large, they are useful and beneficial to consumers. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy Lyons with World and National News. So this story, Paul, is the most read story on the Bloomberg in the past 8 hours, and it has to do with the two most senior commodities executives over at Morgan Stanley. They're leaving after compliance breaches linked to the use of communications tools, and that includes WhatsApp, according to a couple of folks familiar. You're shaking your head like, really?
Wow. I mean, I was just thinking back in the day, as it were, and these types of people. This is the number one and number two person in the commodities business, which is a huge business for Morgan Stanley. In the old days, for better or worse, they would have been effectively untouchable. But we don't know what's really behind this the communication. So that's not disclosed in this story. It's just that
right. They didn't find any wrongdoing, so let's put that
right.
out there.
Yeah, and and it's just everybody's got their compliance policies, and post financial crisis, we know that financial institutions have taken a much finer look at their compliance issues and much stricter look at their compliance issues, and at the same time, there's been a proliferation of communication capabilities with things like these apps like WhatsApp, but that makes it oftentimes even more difficult for firms to monitor to compliance because there's so many different ways for bankers to communicate with clients and traders. The traders that they limit the approved types of modes of communicating, and perhaps that could have been the issue here.
Right, and especially coming off of the financial crisis, you're right. There are rules in place when it comes to compliance. You're dealing with the oversight of federal regulators. Things need to be in place, and so like we said, no wrongdoing found. But we have seen Wall Street really clamp down, whether it's WhatsApp and some others. WhatsApp there. When you put out a message, it's encrypted from start to finish, so you can't monitor it.
Yeah.
We saw JP Morgan earlier this year punishing more than a dozen traders for using WhatsApp at work, firing one, cutting bonus payments for the rest. So this is a big deal. But like you said, these are people. One of the King was there for he joined Morgan 34 years ago.
Yeah, it's just amazing. But it's a new world order post-pandemic and post-financial crisis.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pellet. 13 minutes to go ahead of the closing bell. 13 minutes until we get the latest numbers out of Netflix, the Dow, the S&P, NASDAQ, they're all higher. But U.S. stocks, they have trimmed advances as lawmakers negotiate the size of a potential spending bill to bolster the economic recovery. Here's where we stand. S&P up now by 0.8%, higher by 25 points. At the best level of the day, the S&P had been up by 50 points. The Dow up 193, up 0.7%, and NASDAQ is up now by 64 points, up by 0.6%. 10 years down 8/30 seconds, 10-year yield 0.79%. Gold up 0.3%, 19.10 the ounce. West Texas Intermediate crude up 1.5%, 41.46 a barrel. After earnings, IBM now slumping 6.2%. Netflix, as I mentioned after the bell, down now by 0.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. Just drive, baby.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
So, Paul, this is a guest we always look forward to checking in with us. Back with us for Drive to the Close is Tom Plum, President and Chief Investment Officer at Plum Funds. They're based in Madison, Wisconsin. He joins us on the phone from there. That Plum Balanced Fund, consistently a top performer. It is in the 99th percentile for the past 5 years, according to Bloomberg data. And it has returned on average annually about 12%. Tom, good to have you here with Paul and myself. How are you?
We're great here in Madison. Getting a little bit of winter, but and very concerned about the COVID picking up. But everything else looks pretty good so far.
Well, tell us about COVID. Yep, we are watching it across the country, and it does feel like Midwest and Wisconsin in particular, is where we were in the spring, the New York Metro. What are you seeing? What are you hearing? How's it affecting life?
Well, I think everyone is being affected by staying in, and some of the trends we've talked about in the past have really accelerated because of that. But I think we expected once the kids came back to colleges and stuff and school that you'd see a little bit of an uptick. But what's been surprising is how sticky it's been and how it's continued to just even accelerate, even though people seem to be very cautious and concerned, and everyone's wearing a mask inside a building, so it's hard to understand.
It's interesting, Tom. Let's take a look. The markets here, obviously, they're concerned about the coronavirus. They've got so many things to think about, whether it's, again, the pandemic, the economic impact thereof, the elections. How do you try to see through it, and how do you approach the market, given that there's so many distractions out there for an investor?
Paul, that's a great point. I mean, this is a very interesting time. We're in earnings season. We expect to continue to see those companies that were the growth companies through the first phase of this pandemic to continue to add to that growth rate. But what we're really going to see is from the industrials and others about what they've seen, what they've been able to do with their business models to cut expenses, to right size, and things like that. We've been concerned for quite a while that these companies that have significant amount of capacity, if it's the restaurants, airlines, railroads, industrials in general, that they need to right size for the different volume expectations that they're going to have coming out of this than they did beginning this year before the pandemic started.
So what does that mean what does that mean for something like the airline industry? I was talking with the team of one major airline earlier this morning, and trying to find the way forward and trying to think about safety as well as the financial security of their balance sheet. What does it mean for an industry, maybe Tom, like the airlines?
Well, we've been in a great time for the airlines for the last few years, maybe for the last couple decades. But for any of us who are a little bit older, we remember that it is a tough industry. And often you had forced mergers, bankruptcies, and things like that because highly capital-intensive businesses tend to be in a difficult spot whenever the volumes aren't there. So we're concerned. We're not investors in the airlines or their suppliers, and we expect that the recovery they're going to have is going to be more shallow than, say, the V-shaped recovery that we're seeing in some industries.
So, Tom, what are some of the names you are looking at, given that the pandemic is still with us, economic recovery is probably not in the very near term? What are some of the names that you think are show some opportunity?
Well, Paul, I've talked to Carol a number of times in the past about how my daughter is currently working in Shanghai. 20-some years ago, my son worked in northern China, was teaching. And when we went to visit him after a year in China, he had nothing but cash. No transactions were done with anything other than currency. There was no such thing other than in the tourist sections of somebody accepting plastic for payments. And what you've seen is that accelerate over the last 20 years, where people who had been basically unbanked before are all now on the digital economy and digital financial transactions. We see that the United States, where we were much more advanced in the past, we're actually in a catch-up mode right now. So companies like PayPal, for example, we think have a long trend ahead of them, especially internationally. When we look at their relationship with Mercado Libre, payment processing and basically a mini Alibaba for South America, their relationship there, they're dealing with populations that 2 or 3 years ago, over 50% were unbanked. And now with using the QR codes, the Venmo, the different distribution of how we buy things, this company is in great shape. And as opposed to a lot of the credit card companies that had been embedded in travel and entertainment, they never really had a big part of that business. So last quarter they had revenues over 20-some% growth, and we expect more of the same going to the next few quarters. So a company like PayPal, we think, is really an interesting company. We also love companies like NVIDIA, which what I call the great enabler. If you haven't a chance to look at their YouTube video, it's basically software on a chip, and it is used in every aspect of artificial intelligence, the digital economy, remote working, emulation software, cloud computing, and they by far are the biggest leader in all those segments. So we like companies that are driving this change and those that are enabling the change. Those I think are very, very attractive.
They are, Tom. 30 seconds, really quick. But NVIDIA's got a PE of like 89. PayPal has a PE of 96. You're okay with that? You would commit new money at this point? Just really quickly.
Yeah, well, again, it's not just where the PE is, but as long as the revenue is in accelerating growth, we think that you're going to be looking farther. And as we've talked about before, when you have zero interest rate, the long duration or growth companies are always going to be more attractive than value companies.
Yeah, we're looking at about 20% revenue growth, it looks like, for PayPal year over year in 2020. So those are pretty strong numbers. All right, Tom, thank you so much. Tom Plum, he's president and chief investment officer at Plum Funds, based in Madison, Wisconsin, and joining us on the phone from there. Stick around. We've just got about 3.5 minutes left in the trading day. The close coming your way in just a moment.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellett. There you have it. Sound of the closing bell at the New York Stock Exchange as we wrap up trading on this Tuesday, October 20th. The Dow, the S&P, and NASDAQ all advancing. We did finish well off session highs. Folks from Merlin AI, by the way, ringing the closing bell virtually as we await the latest numbers out of Netflix. Stocks gained as lawmakers negotiated the size of a potential spending bill to bolster the economic recovery. The S&P did bounce back from yesterday's sell-off, even as any deal brokered by House Speaker Nancy Pelosi and the White House likely will face stiff opposition in the Republican-controlled Senate. Today, the S&P 500 index up 16, a gain of 0.5%. The Dow up 113, up 0.4. NASDAQ up 37, a gain of 0.3%. 10-year down 7/30 seconds. 10-year yield 0.79%. Gold up 0.3%, 19.10 the ounce. So an update across the board. As for the overall earnings environment, Tom Plum is Chief Investment Officer and Portfolio Manager at Plum Funds. He was our guest moments ago, right here on Bloomberg Business Week.
We've been concerned for quite a while that these companies that have significant amount of capacity, if it's restaurants, airlines, railroads, industrials in general, that they need to right size for the different volume expectations that they're going to have coming out of this than they did beginning this year before the pandemic started.
Just getting the latest numbers out of Netflix. Shares are plunging. Netflix third quarter streaming paid net change up 2.20 million, estimates 3.32 million. Netflix also sees fourth quarter streaming paid net change of up 6 million, estimates 6.54 million. Netflix tumbling after third quarter subscriber additions missed estimates. Fourth quarter revenue, by the way, it sees fourth quarter revenue in the range of $6.57 billion, estimates $6.59 billion. Recapping an advance for the U.S. stock market today, S&P up 0.5%. I'm Charlie Pellett. That's a Bloomberg Business Flash.
Wild thing, think you move me. I got a few moves I know you'll like. Shaking all over.
Bloomberg Business Week. Movers and shakers.
Shaken, not stirred.
On Bloomberg Radio.
All right. You can tell we're in an earnings season as the numbers are crossing the Bloomberg terminal. Carol Masser along with Paul Sweeney. Also with us is our Bloomberg News cross-asset reporter, Sarah Ponzek. I just want to go a little bit through, I know we want to do big picture, but let's go a little bit more into Netflix because we are seeing the stock. I'm pulling up the numbers.
6%,
yeah, down about 6.5%. Paul, what do you make? You know this world. What do you make of the numbers?
This is trading on the subscribers, this net paid streaming subscribers, and they missed on the third quarter, came in a little bit light there by 1 million. And on their fourth quarter guidance, also a little bit below expectations. So that's what's driving the stock here. But generally, this is a story that's up 60% year to date and is one of those just perfectly placed companies for what we're all experiencing now with the pandemic and how consumer tastes are changing here. So this is what we get with Netflix. There's typically every quarter an 8 or 9% move either way when they release earnings. And so today's a fairly typical trading day.
Well, and to be fair, they reminded us, listen, it's not going to be the numbers that you saw earlier in the year that were just blockbuster, right? As everybody was stuck home and everybody was streaming left and right. So
yeah, it is. It is. You're exactly right. And they're always, in my experience, always very good with telling investors what they know when they know it. There's not a lot of surprises from at least, their business is, it's a very vibrant business, so it's oftentimes difficult to predict. But most investors feel like these guys are straight shooters, and when sometimes they do better than forecast, sometimes they do worse, and here we are.
Yeah, and as you said, it's still like an unbelievable outperformer this year. Let's bring in Bloomberg News cross-asset reporter Sarah Ponzek. Sarah, I'm looking, we had more names up in the S&P, about 357, 145 lower, 3 unchanged, and almost all of the major industry groups, 10 of them out of 11, were higher today. Energy at the top of the pack here.
Right. It was a pretty interesting day. Lots of fluctuations. We had the S&P 500 up 1.5% at one point, only to give that up once again. We've talked about it almost every day, it seems.
Yeah.
Markets continue to focus on all those stimulus headlines. But I do want to bring it back to Netflix, too. As Paul mentioned, subscribers did miss, but this is almost just another day in the life of Netflix earnings. If you look at what the implied average move for Netflix would be in the day after reporting, 9.2%. So Right now, when I look at Netflix shares down about 6.5% or so, we haven't even met that options implied move yet, missing on that subscriber number. But this is going to be viewed by investors as a larger view into this boost that we have seen for the companies, many of them big tech companies, that have supposedly benefited from the coronavirus, from people being locked at home. Netflix clearly one of them, but investors are trying to gauge when that boost may start to fade. Have we seen the peak in that COVID-19 work from home, quarantine, stay at home type of boost? And also fitting into this is the fact that even though we got that antitrust report dropping today for Google parent Alphabet, we still saw Alphabet up 1.4%. We saw all the other FANG names rise too, that is, except for Netflix heading into that report.
And they still have, I'm just looking here at the live blog on this, cash is now up to $8.4 billion. Not too shabby, right? I mean, despite all the money that they're spending on content and continuing to build out their network, Paul, they still got a lot of money on hand.
Yeah, that's the story. It's a virtuous circle, which they painted since day one. The more money we spend on programming, the more subscribers we get, which generates more revenue to allow us to spend more money on programming and just expand our moat. And it just works until it stops. It works until subscriber growth slows or declines. That's the bear case, which has been blown out of the water for 7, 8 years now. So they've done a phenomenal job changing the way consumers consume content.
And then we know that there's a lot more, competition when it comes to streaming. Disney, right? They've just changed their whole business model, right? And it's geared really towards that business. Still a small part of their business, but a growth business.
That's exactly right. And a lot of people that, the growth in Disney's business and streaming in general has spooked a lot of Netflix investors, but the stock is still up 60% because they have the brand name and they have first mover advantage. Both of those are valuable.
All right, Sarah, what else is interesting for you?
What else is interesting for me? Well, I do want to focus also on the fact, it fits into our conversation right now, but I just want to hammer down the point that even though we got this antitrust report and you have some saying that this is a big deal, we're finally getting some movement, the reality is that we still have a long ways ahead, likely. Earlier today, Bloomberg Intelligence and antitrust analysts described this as a marathon. I remember it was almost exactly a year ago, I wrote a story about antitrust reports for Bloomberg Business Week about how strategists, analysts, investors weren't too worried. And look, we're a year later, we're a bit further down the road, but they still don't seem too worried.
Well, remember the Microsoft case, Paul? How long did that one go on for?
That was right. That was 25 years ago, and it started in Europe, and it took about 12, 15 years.
Yeah, exactly. So stay tuned. And Google shares ending up the day 1.4% higher. Sarah, thank you so much. Really appreciate it. You're listening to Bloomberg Business Week, and this is Bloomberg.
All right, Dave, you're up.
Hi, my name is Dave.
Wilson, where are you? Wilson!
Just what do you think you're doing, Dave?
We're going for the price on Wilson. Open up the door, it's Dave. Who? Dave. Hey, Mr. Wilson!
All right, hey, Mr. Wilson. We've got Paul Sweeney working out, doing some weights, I think, on the side. It's all about working from home, multitasking. Dave Wilson, though, what do you got for your stock of the day?
I've got Pentair, Carol. It's a company that makes all kinds of water-related products, everything from pool and spa filters to municipal water treatment and monitoring systems. Pentair was founded and went public in 1966. The ticker is PNR. Now, the company's shares peaked back in 2014. They've been up and down since then. This year, they dropped as much as 52% before making back the entire loss and then some. Today, Pentair reached a 6.5-year high after releasing third-quarter results. Earnings rose 19% when analysts expected a drop of 13%, according to a Bloomberg survey. Revenue far exceeded projections. Pentair cited strength in its residential business, especially pool equipment. With people staying at home, they were buying new gear. The growth outweighed weakness in commercial and industrial markets. Now, Pentair shares were up as much as 7.3% today. They closed with a more modest gain, 4.1%.
Yeah, up about 12% so far this year. Yeah, good stock.
Yet another stay-at-home stock.
Where were you, 7 or 8 months ago with that name?
That's
when I needed it.
With a whole lot of stocks for a whole lot of people.
Yeah, exactly right.
Got chilly all of a sudden. All right, Dave Wilson, always appreciate it. Check out his stock of the day. Ticker is PNR, Pentair. All right, you're listening to Bloomberg Business Week. Carol Masser, Paul Sweeney. Coming up, we're going to talk a little bit more about Netflix. One of our favorites, Dan Morgan, over at Synovus. He's going to join us in just a second. Right now, a check on world and national news for that. In our Bloomberg 960 newsroom. Hey, Ed.
All right. How you doing, Carol? Nancy Pelosi Steve Mnuchin are Zooming right now. Both say they're hopeful of a deal. Pelosi on Bloomberg with David Weston saying the Republicans have given some ground, but that still, job one.
To crush the virus. And that is our main goal in this legislation so that we can open up our schools, open up our economy safely.
She says there are bumps in the road, but thinks a basic language can be on the table for the whole deal, or hopefully anyway, by the end of the deal. End of the day. Meanwhile, Bloomberg chief correspondent in Washington, Kevin Cirilli, says all eyes on the Senate Majority Leader, Mitch McConnell.
He has to deal with a constituency, Taylor, not just the rank-and-file Republicans in tough battleground states to keep control of the Senate, but also many Republicans around the country who are looking at their calculators, crunching the numbers and saying they're on board with stimulus, but not so much on board with the $2 trillion+ that Washington is calling for.
So you put your right foot in, you take your right foot out, but never mind. New York Governor Andrew Cuomo says with cases spiking in New Jersey and Connecticut, New York is unable to stop the virus spread from coming in.
To the extent travel among the states or between the states is not essential, it should be avoided.
And he says could have a disastrous effect on the economy. He's asking the other governors for help. New York has 43 states, by the way, on its advisory list. And the UK is preparing for the first tests that expose healthy people to COVID-19. It is called the Human Challenge Trials, part of vaccine development. If it works there, it may come to the U.S. next year. Some ethical questions, of course. In San Francisco, I'm Ed Baxter. This is Bloomberg.
All right, Ed, thank you so much. Paul Sweeney, I don't know that I'm raising my hand for that one.
No, exactly.
I mean, I understand science and how you have to do these things, but it's pretty fascinating, right?
It is, and we're going to have a lot of amazing science, we hope, come to the forefront over the next several months.
Yeah, exactly. All right. Obviously tracking that, but we're also tracking some of the stories on Top Tech on the Bloomberg, and one of them has to do with the Senate Judiciary Committee. This is out from our Bloomberg government team. They are getting ready to subpoena Mark Zuckerberg, heard of him, Jack Dorsey, heard of him. According to the panel's chairman, Senator Lindsey Graham, I guess they're looking to these two. They're due to testify also before the Senate Commerce Committee on October 28th after the companies moved to curb the spread of a controversial New York Post story on Democratic presidential nominee Joe Biden. Man, this was a story we were all talking about big time on air, but also in the newsroom.
Yeah, exactly right. I mean, I think the pressure's really been mounting on particularly Facebook and Twitter in terms of what information they deem appropriate and not appropriate. And as we generally know, both of those platforms have generally taken a very, very light touch, the result being that a lot of content gets on those platforms that a lot of people don't like, and therefore it calls for regulation. Okay, who regulates it? What do they regulate? And we get to what the media industry has been doing since the beginning of time, which is editing. Deciding what is right, what is true information, true reporting, and so on and so forth. Should not these platforms be held to a similar type level of criticism and accountability? And that's kind of one of the big issues here.
Right. Accountability and their liabilities, right, for the content that's on their platforms, right? And you think about publications, if they do put out something that is false, I mean, there are often legal repercussions, especially if they're damaging. So you do wonder, especially in a world where so many individuals, so many Americans get their news from these social media platforms. So how do we treat them? So that will be something certainly we're watching. This is Bloomberg.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet, continuing to keep an eye on Netflix shares after hours. Netflix tumbling now by 5.6%. Third quarter streaming paid net change did miss estimates. Also reporting after the closing bell today, we heard from Texas Instruments, and Texas Instruments shares, they are trading higher after reporting its latest quarterly report. TI does see fourth quarter revenue in the range of $3.41 billion to $3.69 billion. Estimates were for $3.35 billion. Again, Texas Instruments shares up now by just about 1.8%. It was an update on Wall Street. Stocks, however, did finish well off session highs. S&P up 16, a gain of 0.5%. The Dow up 113, up 0.4%. NASDAQ up 37, a gain there of 0.3%. 10-year down 7/30 seconds. 10-year yield 0.79%. Gold up 0.3%. 19.10 the ounce. And West Texas Intermediate crude up 1.5%. 41.46 a barrel. Recapping, S&P up 16 to the gain there of just about 0.5%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
It is a busy, busy Tuesday. All right, Charlie, thank you so much. He's keeping track of it all. All right, and that includes Charlie breaking down those Netflix earnings. Stock down about 5.4%, excuse me, Paul, in the after hours after subscriber growth forecast misses. The company also saying it's making good and careful progress getting back to production during the pandemic.
That's interesting.
Right? Yeah.
To me, that's a new piece of information for the marketplace, and it's a positive piece of information because production's been effectively shut down since mid-March.
Exactly. And that includes season 4 of Stranger Things, which is one of their big hits. All right, Dan Morgan, come on in on this. Vice President and Senior Portfolio Manager at Synovus Trust Company. They've got roughly $17.1 billion in assets under management. Dan back with us on the phone from Atlanta. Dan, how are you?
Hi, Carol. Very interesting number, especially after those huge beats that you and I talked about back in the first and second quarter where they added 26 million new subscribers.
But we knew that wasn't a real number that was going to continue.
Well, you're right, Carol. And if you go through these numbers, I mean, 220, they came out originally and projected for the third quarter they do 250 million. What really stands out in these numbers, which is kind of interesting, is that we were looking for the U.S. and Canada to actually have a drop of about 260,000 new subscribers. They actually gained 180,000 new subscribers. But then things were very weak in their European and Latin American markets. Both of those numbers came in below my estimates. And I know they did a price increase recently in Germany, Switzerland, and Austria, and I'm wondering if that somehow impacted these European numbers, because they only did 760,000. The street was looking for 1.25 million.
Dan, what's your view overall? Again, these numbers, we see volatility in the Netflix numbers every quarter, but the long-term trend for most folks seems pretty positive. What's your view of the competitive landscape? That's one issue that's really changed over the past 12 months. It's gone from, one, maybe 1.5 players in the marketplace, if you think about Hulu, to now we got, half a dozen quality streamers out there.
Well, you're right, Paul. And, that's what's surprising about these U.S. and Canadian numbers, because of the competition and the fact that the market is becoming saturated, we're expecting those subscriber new growth numbers to actually drop. And, you're right. Disney Plus, you look at Fox, you've got Apple at the low end at $4.99, HBO Max. It's becoming very, very crowded. And, we've had this conversation before, Paul, and really, I guess if you're a bull on Netflix, is that you would expect people to have more than one service, right? They're not just going to have either or. And then the fact that they hook you on these series, and they spend about $19 billion a year on new content. So, that's kind of how they keep you sticking around on the couch watching their shows and not moving over to HBO Max or Fox or Disney Plus, to watch their movie content. So far the strategy's kind of worked, but you're right, Paul. Eventually you would think that this luck is going to run out and you're going to start to see some negative impact on especially U.S. and Canadian subscriber growth.
Did you guys see this? Netflix says its most popular title in the third quarter was the action thriller The Old Guard, starring Charlize Theron. About 78 million households watched it in the first 4 weeks after its release. That's big.
That is. So,
right?
Dan, what does that mean about the movie theater business? Is this pandemic just accelerating the fact that Carol and I are never going to get off our couches and we're just going to sit there and, with our remote controls going between all these streamers?
I think you're right, Paul. I mean, I think there was news out a couple weeks ago. I think you guys talked about it, where some of the cinema companies actually filed for Chapter 11. So, the trend is definitely away to going out to the movies. People aren't rushing for the latest, movie that comes out. We'll wait for, to come on the streamer. So, yeah, I think this is the future going forward, is just staying at home, watching the movies, maybe 6 months late. But yeah, it's going to be a tough sled going forward fundamentally for the, the overall theater business. I think it's going to be really hard to kind of keep afloat. You're going to see some serious, concentration of companies in that group.
Dan, talk to us. You were talking about some of the overseas numbers, and they specifically talked about the APAC region being the biggest contributor to subscriber growth during the quarter, representing 46% of global customer additions, and revenue in that region rose 66% year over year. Put that in perspective to their overall revenue. How big a piece of the pie is this?
Well, you're right, Carol. I mean, they came in over 1 million subscribers in Asia Pacific, and I just mentioned that Europe and Latin America were both weak. So, if we think about this, Carol, and that is that we know that the market here locally is becoming saturated. How are they going to continue to drive their average revenue per user? And if you think about that area, their average revenue per user, let's say for fiscal year 2020, is about $9.05. That compares to about $13.28 for the U.S. and Canada. So, you know what, Carol, the biggest challenge going forward is how do you grow these international markets when the overall revenue that you're gathering by per subscriber is less than you're getting in the U.S.? And that's really a conundrum for them going forward in terms of driving that top line, like you just mentioned, and these areas becoming so much more important in terms of revenue and new growth.
What are some areas of growth from a programming perspective, do you think, Daniel? Or you think that they're comfortable with their programming mix of syndicated product plus new product?
I think they're pretty comfortable. I mean, I mentioned earlier they're spending about $19 billion a year. They came out that they're expecting to break even on free cash flow this year. Next year, maybe about $1.5 billion negative free cash flow. And, they spend, Paul, more than anybody else in content. And that's really their... that's what drives those upward numbers. So it's kind of this constant, like, well, how much money do you have to spend to keep up, and how much free cash flow do you burn? But if you don't create the content, then you can't grow the top line with new subscribers and keep adding new people to the numbers. So it's an interesting conundrum for Netflix, and so far they've been able to navigate it, but it is something down the road that you have to be worried about. They have about $15.5 billion in debt, so it is something to keep an eye on.
All right, the stock now down a little bit more than 5% here in the after hours. Hey, Dan, always we appreciate your input. Dan Morgan, he's Vice President and Senior Portfolio Manager at Synovus Trust Company, on the phone from Atlanta. For those of you listening in New York and San Francisco, watching on YouTube, Bloomberg Business Week continues. If you're listening on Bloomberg 99.1 in D.C., Sound On with Kevin Cirilli is coming up next.
Live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, Paul Sweeney. So 13 days, 8 hours, 28 minutes, and 36 seconds.
Not that we're counting.
Not that we're counting. I got my clock going. That is, of course, to the U.S. presidential election. We're going to check in with our own Wendy Benjaminson, who watches all things politics for us here at Bloomberg. So we'll check in with her in just a moment. There's a lot going on. All right, let's get back to Charlie Pellet. Also a lot going on after the closing bell. Hey, Charlie.
Well, hello there. Absolutely right about that. Let's get right to the chase because a lot of earnings. Among the most closely watched after the bell, Netflix. It did add fewer new subscribers than predicted in the third quarter. It also issued a forecast that missed Wall Street's estimates, renewing doubts about its ability to maintain growth as pandemic lockdowns go away. Netflix shares tumbling now by just about 6% after hours. Also after hours, we heard from Texas Instruments. It projected revenue for the current quarter that did top analyst estimates, indicating demand for chips used in cars and personal electronics is rebounding. Texas Instruments up now by just about 1%. Another day, another deal in the oil patch. Pioneer Natural Resources agreeing to buy Permian Basin peer Parsley Energy for $4.5 billion in stock, just the latest in a flurry of mergers that is quickly reshaping the beleaguered American shale oil industry. Pioneer down 4.6%, Parsley up after hours by just about 3%. It turned out to be an up day on Wall Street. The Dow, the S&P, and NASDAQ did all advance today. However, stocks finished well off session highs. The S&P up 16, up by 0.5%, have been up as much as 1.5%. Investors certainly keeping an eye on those stimulus discussions. The Dow up 113, up by 0.4%. NASDAQ up 37, up by 0.3. 10-year yield 0.78%. Well, as for the overall market backdrop, David Leibovitz is global market strategist at J.P. Morgan Investment Management.
When we look at the economy, the easy money has been made. The easy gains are now behind us, and the recovery is going to be more challenging from this point forward. We have noticed that there's been a pretty tight correlation between income growth and retail sales. And so my biggest concern is that in an economy which is 70% consumption, you begin to see that income, which was coming from the government, roll over. Retail sales are going right along with it.
And speaking of retail sales, home improvement retailer Lowe's is not known as much of a Christmas destination, but it wants to change that by adding more playthings and gifts. The chain says it will sell items like electric scooters, trampolines, backyard movie screens, and Ninja air fryers. The majority of those new products will be available online, also in select Lowe's stores. Among some of the home improvement retailers today, Lowe's up 1.5%, rival Home Depot up by 0.8%. Recapping, stocks did finish higher today with the S&P up 16, up by 0.5%, gold up 0.3, 19.10 the ounce. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Yes, indeed. We are 13 days and counting down to the November presidential election in the United States. Lots of congressional races as well around the country. The outcome will set the tone and direction for the country for the next 4 years. But, of course, Paul, first off, people have got to deal with the virus still, and public officials have to deal with it. That's one big issue.
That is one big issue. And, we've said all along, or some people have said all along, it's a national problem, requires a national response. Haven't quite had that. It's been much, much more of a regional and even state, even local response.
Yeah, really good point. All right, lots for the candidates on the campaign trail to talk about. Bloomberg News politics editor Wendy Benjaminson. She's got to keep it all straight. She's on the phone from Washington, D.C. You laugh, but it's crazy, right?
It is crazy.
So, Wendy,
So, Wendy, it's just so much going on here. Let's start with, what is, I think, to coin a term used back in the 80s by NBC television, must-see TV Thursday night with the debates. What's the thinking within Washington as to how this might play out, given what happened the first time?
Yes, so there apparently at this moment, never say never, but there's apparently a debate Thursday night. President Trump was complaining bitterly about it all day yesterday. He hasn't today, so that suggests there will be a debate on Thursday. But he's been complaining about the topics and about the moderator NBC journalist Kristen Welker, and he's also been complaining about the rule change, which is a mute button. If either candidate goes over their allotted time, their microphone will be shut off. So this is a brand new, never-before thing happening in a presidential debate, but it's because of that last debate where President Trump wouldn't stop interrupting Democratic nominee Joe Biden and talking over him, so he didn't get the same amount of time to speak.
All right. I mean, who's muting it? Who's doing that?
It won't be the moderator. That would have put them in a terrible position, but I think it will be on for the amount of time they get to speak, and then it shuts it down.
Okay.
But it's on a timer or something.
So they each have these uninterrupted 2 minutes to speak at the beginning of each of these 15-minute segments, but then after that, it's a free-for-all, right?
I think it's a little more structured than a free-for-all. I think one gets a 30-second response and then a 30-second rebuttal and then a 1-minute response, something like that. They'll announce it at the front of it, but it's not just a free-for-all because then we'll have what we had a couple weeks ago.
So, Wendy, typically the candidate that is trailing in the polls really values debates more than the person leading in the polls. So for President Trump, to the extent you believe the polls, what does he have to do? What should he do during this debate to try to close the gap, if you will?
Well, the people we've spoken to who are on his side, these are his allies, say that he really does need to make up for last time. He needs to focus on the issues at hand. They've listed the topics. He needs to, act like he can be restrained in some way, and then to really sort of let Biden speak, because they believe, if Biden gets a chance to speak, he will disappoint people, and they would like to hear, what Biden has to say. The Biden people, of course, feel completely differently about that.
Just got about 40 seconds, and then we'll come back and talk some more, Wendy. But in those 40 seconds, I mean, who has the most at stake here? Or for the most part, a lot of Americans have already voted. Does it really matter?
It matters less because so many millions of people have voted, yes. But it's still a chance for those few who haven't voted, who may be on the fence, and I think there's about 14 of them in the entire country, to decide whether they're going to vote for Trump or Biden.
Oh, man, just when you think it can't get any more interesting. Wendy, sit tight for a second. We're going to do a little bit of world and national news, and then we'll come back and talk some more. We're going to come back to Bloomberg News politics editor Wendy Benjaminson on the phone from Washington, D.C. I mean, I feel like for such a long time, Paul, especially as we were dealing with the pandemic, it felt so far away. Yes. And then here it is.
Here it is. And the dynamic this year of so many people, as Wendy said, voting early, it's just a whole new dynamic heading into the debates, heading into the final week, the march across the states, the key states, and then, of course, election night. And what will we know come the evening of the 3rd?
Yeah, I want to talk to you a little bit about polling, national versus more localized polling, and what really tells the story about what's going on. All right, right now, let's get a check on world and national news. For that, back to Ed Baxter in San Francisco. Hi, Ed.
Hi there. Just sitting, chuckling for a little bit, talking to Wendy there. For 2 hours on Thursday night, the most powerful person in the world is not going to be Donald Trump, not going to be Joe Biden. It's going to be the person with the mute button. Is that a job that you'd volunteer for? Well, today is the day. We have an answer on whether there's basic agreement on stimulus. Nancy Pelosi on with Bloomberg's David Weston today says getting funding for tracing and fighting COVID-19. There are other issues like getting money for people who have lost work and for first responders.
Now let's weigh the equities. We all want to get an agreement because people need it, and it's urgent, and our economy needs it. And so that's what, hopefully by the end of the day today, we'll know where we all are.
And that's not the end of the process. Bloomberg's Billy House.
Still needs to be put on paper, and she needs that to be done by the end of this week for it to pass next week. There's still a couple hurdles, such as liability shield differences with Senate Republicans, but she overall appeared very optimistic that they were trending toward getting something written, perhaps tomorrow or by Thursday.
Yeah, and of course the wild card now is whether enough Republicans will go with the increased price tag itself. UK set to start trial of injecting healthy people with COVID-19 virus to be a part of the vaccine trials. They plan to use 18 to 30-year-olds. Dr. Todd Illerin says still doesn't answer all the questions.
Proving that you have decreased infection with these trials in healthy young people doesn't exactly translate into showing that it will work in older patients with chronic conditions.
Yeah, the U.S. is eyeing a similar program if this one works next year. In San Francisco, I'm Ed Baxter. This is Bloomberg.
All right, Ed, thank you so much. I want to stay with the election campaign, but I just saw this story on the Bloomberg too, Paul. I don't know if you saw it.
Yep,
Senate Majority Leader Mitch McConnell telling colleagues, this isn't just another story, that he has warned the Trump administration not to make a large stimulus deal before the November 3rd election. This is in the Washington Post, citing two people familiar. McConnell suggesting House Speaker Nancy Pelosi isn't negotiating in good faith with Treasury Secretary Steven Mnuchin, and a deal could disrupt the Senate's plans to confirm Amy Coney Barrett to the Supreme Court next week.
Playing all of his cards there to try to forestall. But warning the White House, I don't typically see that language, from the Senate to the White House.
No.
Advise, suggest, but not necessarily warn. But it coming down very, very to the last strokes either way here on this fiscal stimulus package. And to tie it in with the Supreme Court was an interesting move.
Yeah, absolutely. And speaking...
He knows where his leverage is. I'll put it that way. He knows where his leverage is.
It's really just kind of wild to watch. It's like watching House of Cards or watching, Old West Wing, if you will, going really, really back. Another story, though, from the campaign trail, we saw this, our Ryan Teague Beckworth reporting Melania Trump's return to the campaign trail. It has been put on hold. Apparently, she's been still getting over COVID, and I guess she still has some coughing, and I guess this is out of concern.
Yeah, the term out of an abundance of caution that we've become used to. I guess she was last seen publicly on September 29th during the first presidential debate in Cleveland, but since testing positive hasn't been seen since. So again, no need to rush it, presumably, and let's make sure you can take care of this thing once and for all and be healthy as possible. So that appears to be what's happening here.
Yeah, and just a reminder, I kind of, when I'm watching the president out on the campaign trail, I'm like, oh my gosh, he had the virus just a couple of weeks ago. It's pretty wild to kind of get your head around that.
And then we all saw him dancing on a stage just a night or two ago. So I guess he's feeling better, which is good to see. And hopefully the first family continues to get well.
Yeah, we do wish them well.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Shares of Netflix are tumbling after ours. Netflix down now by 6.5%. It did add fewer new subscribers than predicted in the third quarter and issued a forecast that missed Wall Street's estimates. Also reporting after the close of trading, Texas Instruments. It projected revenue for the current quarter that did top analyst estimates. Shares are pushing higher by 0.8%. An after-hours deal in the oil patch today. Pioneer Natural Resources buying Permian Basin peer Parsley Energy for $4.5 billion in stock. Pioneer up by lower by 4%. Parsley shares, they are higher by 2.8%. It was an up day on Wall Street, although stocks finished well off session highs as investors focused on stimulus discussions. The S&P up 16, up by 0.5% at the best level. The S&P was up by 1.5%. The Dow up 113, up 0.4. NASDAQ up 37, a gain of 0.3. 10-year down 5/32, 10-year yield 0.78%. Gold up 0.2%, 19.07 the ounce. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, we want to get back to our conversation with Wendy Benjaminson. She's Bloomberg News politics editor. She's still with us on the phone from Washington, D.C. Wendy, one thing I did want to ask, and I've been listening to a lot of the conversations too on Bloomberg, that has to do with, what we should be keeping an eye on, national polling versus local polling. Like, what gives us the better picture about what's going on in the race right now, especially as we get closer to Election Day?
Right. That's a very good question. All of us are a little gun-shy after 2016 about relying on polling at all. But the pollsters insist that they have learned their lessons and fixed the mistakes that they made in 2016 so that we are getting a bit more realistic picture. I would caution you listeners away from putting too much stock in the national polls at this point, because remember, the election is 50 individual elections that add up to 270 electoral votes of the 583 electoral votes 538 electoral votes that you need to become president of the United States. So we know Joe Biden's going to get California and New York and probably Illinois and other states, but those are the big electoral prizes that every Democrat gets. Trump will probably get Texas. Then we're all looking at Florida. So if you see a Florida poll, if you see a poll from Ohio or Wisconsin, Pennsylvania, or Michigan, those are the ones you really want to watch, because those are the states that matter in determining which one of them will have 270 electoral votes at the end of the night, I hope, if not week or month.
Yeah.
What is your sense there, Wendy, on that? What do you think the timing will look like? Boy, a few weeks ago, there was real concern that this could drag on for days and weeks, but then we've seen the position of former Vice President Biden get a little bit stronger, perhaps minimizing that risk.
Yes. So if it's a blowout for either one, we'll probably know that night or the next morning who won. If it's tight, and in the states, what's interesting is that in the states where it's tight, the state officials coincidentally have some of the slowest counting procedures. So there are states like Wisconsin and I think Michigan or Pennsylvania, two of those three, where the counting can't even begin until Election Day. So all those people who are voting now, you see the long lines of people standing in line to vote, mailing in their ballots, all of that. Those votes in those states can't even be counted until November 3rd. So then they have to check the postmark, then they have to check the signatures, then they have to check a number of other things in different states. And so that could last a while. But the people who go and vote in person early, those can be counted in most states ahead of time, and the mail-in ballots that come in ahead of time in most states will be counted. So there's a good chance we'll know, if not that night or the next morning, by the end of the week, if it's fairly decisive. If it's another razor-thin vote, it could be a week or so before we know for sure.
What do we know, too, Wendy, that still matters to voters at this point? I mean, we kidded yesterday with one of our guests about, it's the economy, stupid. And I mean, it ultimately comes down to that. And yet, it'll be interesting to see, especially in a year where we've been dealing with the pandemic and many states around the country are still dealing with it. In fact, they are peaking. How that will factor in and impact the vote.
Yes, and I do think from our reporting that the president is making one mistake in not focusing as much on the virus. I think it is the economy stupid, but it's also the virus stupid, because you can't get the economy back going in the way that it should be until we're all out of the house. And as long as we're all stuck in the house and unable to go to our jobs and use public transit and go to the mall and go to restaurants and bars, the economy is not going to come back. And so and I think Biden has been a little smarter in his thinking in that, the virus and the economy are the top two issues. Trump the other day, the president was just saying, all you ever hear about is COVID, COVID, COVID. I'm so bored with it now. But most of the country is still scared out of its wits. So.
Yeah, I think so. So, Wendy, let's switch to the Senate here. A lot of folks tell me that's maybe even more important than what happens in the White House. What's the thinking within Washington about Democrats and their ability to perhaps wrestle control of the Senate?
I think the Democrats have a good chance of wrestling control of the Senate. I was listening to what you were saying about McConnell and the White House and the stimulus, and, there are voters who are saying that the Supreme Court nominee may not be as important to them as getting some stimulus money. And the fact that Republicans are prioritizing the Supreme Court over the stimulus may hit some voters' ears the wrong way. In addition, you have Democrats sort of surging in a lot of states that matter, like Arizona. Martha McSally looks like she may be losing to Mark Kelly, the astronaut. And you have in Georgia, those races have become very tight. And it's possible that Georgia will have 2 Democratic senators, which hasn't happened for 50 years since Democrats were the Southern Party. And it would be very interesting to see that happen. Susan Collins is in trouble. Lindsey Graham may be in trouble. So those are, big names that may not survive this election.
Yeah, it's really kind of fascinating that, we really could see a tremendous shift. But I really do, as you said at the beginning, we were really, I think, fooled, because of polling and other things last time around. And I do wonder how much of it does ultimately come down to the wire.
I think some of us are going to be very surprised. I really do. It's tight in Ohio. Very tight in North Carolina. Very
You know what, Wendy? Unfortunately, your line is breaking up a little bit, so I think we're going to unfortunately have to say goodbye. We've been talking with Wendy Benjaminson. Always great insight when it comes to what's going on the campaign trail and this election. Bloomberg News politics editor Wendy Benjaminson joining us on the phone from Washington, D.C. I mean, I do wonder, Paul, whether it will be a very, very late night or whether it becomes a week before we know the election, or does it potentially wrap up pretty quickly? We've seen that on election night.
We have, and the markets at one point, not too long ago, several weeks ago, were very concerned about a contested election, and we saw that in the markets. And since then, the polling data for nominee Biden has improved, maybe to the point where the markets feel like, okay, that contentious election risk, we can pull that back a little bit off the table. I don't think it's completely off the table because these things could move